Are we near recession?
I think we are teetering towards a recession. Now, of course, the fourth quarter number does look pretty good, particularly against the backdrop of an even stronger rise in the third quarter. But when we look at what's happening with the consumer, which is the backbone of the U.S. economy, we are seeing a clear loss of momentum.
I think a recession is far from inevitable. The odds are less than 50%. But if we don't have a recession, I think the odds of inflation coming down to 2% are much longer and harder than even that.
In other words, inflation will come down quickly. That's a good thing, and therefore it increases the chances of a soft landing, and that's where the market is right now?
Oh, sorry. Oh, I'm saying we may not have a recession, but if we don't have a recession, we're probably ending this year with inflation above 3%.
Is a recession coming? Have we reached the peak inflation? Will the Fed continue to hike rates in 2023? What does the macro picture of 2023 look like? To answer all your worries, in today's video, Raoul Pal has shared his viewpoint on whether or not we are in a recession. He has also discussed the Fed's next move, Bitcoin price prediction, and the macro picture of 2023. So stay tuned until the end of the video. And if you haven't joined our community yet, go ahead and hit that subscribe button for more videos like this. Let's dive into the video now without wasting any more time.
This is how I'm framing it this time around. So 2018 was the last time the Federal Reserve stopped raising rates. They didn't cut until, I think it was August 2019. So what happened was the moment the Fed went on hold, the markets went on an upside rampage. They were down kind of 30% and then they recovered. So not wildly dissimilar to now. And if I look out over the next year, well, the S&P did about 10%. The NASDAQ did about 14%. Kind of those growthy tech stocks, the kind of ARK style stuff, they did about 18%. So that was good. Bitcoin did 100%. And that's after it had gone up 400% and corrected. So, and even that didn't take back the all-time high. It took the following year for the all-time high to take out. So I think it's going to be a positive year, but that kind of choppy year where one minute you think, oh my God, it's going straight to the high. Then it's like, oh my God, it's gone back down. We're all going to die. And then it stabilizes. And it's generally, I think we'll look back and go, okay, we survived and we've actually made some money again, or made some money back. Let's put it that way.
In general, it's difficult to predict the future with any certainty. After a rolling 2022 of volatility caused by geopolitical tensions, rising inflation, and data-driven rate hikes by the Fed, traders tend to remain wary in 2023. They cannot afford to take it easy and take risky bets on the premise that inflation has peaked and will cool off soon. But Raoul Pal comments that we have already seen the Fed slowing down. Their recent rate hike was kind of below what their norm has been. For now, the market looks priced for an economic soft landing outcome. Talking about cryptos, Raoul Pal has mentioned that they are off to a strong start in 2023 after last year's sell-off, with cooling inflation a pillar of support.
Why did prices come down all year? Because they were pricing in recession. Now, if we're pretty much at the point of recession, they will price in recovery. It's a bit weird. It's because there's certain things going on. One is that things like retail sales are driven by the total amount of volume of goods. Now, because prices have gone up a lot, the volume can have gone down and it still looks like, hey, presto, everything's okay. But it's not. Everyone's selling less stuff. So there's these weird things around inflation that we've not had to deal with. And unemployment's a bit sticky, but GDP growth is still, by last measure, still positive. We had a couple of scares, a scare earlier last summer. But for me and my forward-looking indicators, it looks like it's all about to collapse. That's growth is going to collapse. Now, the markets might get a bit unnerved by that, but again, usually they should look forwards.
If you look at the GDP data, it does seem like we left 2022 with a little bit more momentum than people had thought. The U.S. economy kept up a strong pace of growth in the fourth quarter, but momentum appears to have slowed considerably towards year-end, with higher interest rates eroding demand. Raoul Pal explains that crypto prices were down because they were pricing in recession. There have recently been growing concerns about the global economy slipping into recession. These concerns were primarily triggered by the contraction of the U.S. economy observed in the first half of 2022. the U.S. GDP decreased at an annual rate of 1.6% and 0.6% in the first and second quarters of 2022, respectively. 6 months of economic decline is a long-held informal definition of a recession. Yet nothing is simple in a post-pandemic economy in which growth was negative in the first half of last year, but the job market remained robust with ultra-low unemployment and healthy levels of hiring. In the third quarter, however, the U.S. economy grew by 3.2%, signaling a significant recovery. And the latest estimates show that the U.S. real GDP increased at an annual rate of 2.9% in the fourth quarter. So, are we in a recession now or not? Let's get into the next clip to hear what Raoul Pal has to say on this matter.
It might be a more complicated year, but I don't think it's going to be that complicated. So macros, everyone suddenly learned, as they have to understand what macro is, because crypto got sideswiped by macro. They're like, what's all this interest rate shit? And it's now why you care. The world is driven, this whole space is driven by liquidity and network adoption. So the adoption of blockchain technology is ongoing and relentless, but the liquidity of how much money's around drives the space. So once you understand that, you understand a lot about the space. So last year was a massive withdrawal of liquidity. All the money came out, the central banks were tightening rates, all the banks stopped lending money, all of that stuff. And it meant that all assets went down, and crypto goes down the most because it's the kind of longest duration, highest risk asset. So where are we now? So here we are right near the end of the rate hikes. The economy is probably going into recession and pretty soon. And so what happens is the markets start to look forward and say, maybe they'll stop tightening liquidity and take the foot off our necks. And maybe things, because our job in financial markets, particularly in macro, is to live in the future. Looking around today is useless. But looking around, what is the world going to look like in 6 months' time? Are the Fed raising rates in 6 months' time? Almost a 0% chance, because inflation has peaked, growth is falling, we're going into recession. Normally, they would cut rates at that point. Now, they might be a little bit slow to do that because they really, really want to see inflation lower. But it means that the rate of change of all these rate hikes and all this bad news starts slowing down.
The battle with inflation will continue in 2023, and the Fed rate hikes are expected to continue, albeit at a slower rate compared to 2022. The second consecutive quarter of economic growth that the government reported Thursday underscored that the nation isn't in a recession despite high inflation and the Federal Reserve's fastest pace of interest rate hikes in 4 decades. Yet the U.S. economy is hardly in the clear. The solid growth in the October to December quarter will do little to alter the widespread view of economists that a recession is very likely sometime this year.
We're going to get to the point they're going to say, okay, enough. Meanwhile, China's been leading this. The Chinese economy seems to be a year ahead of everybody else's right now. And they started some stimulus process before their lockdowns. And now they've really started to stimulate because, they'd shut down their economy. So we're already seeing this global money supply, and people can see me post this on Twitter from time to time, global money supply year on year and Bitcoin price year on year. They mirror each other. So when liquidity starts to come back in the system, prices start to rise again. So we're at that point, which is why I've been really interested. So in crypto, we've seen that. I thought June was the low, and it was in ETH, some stuff, other stuff, no. But the point being is we've thrown the worst possible news. Prices kind of stopped going down. And now we're starting to see liquidity when everybody else is saying, can't you see, you idiots, you're going into recession. How could you own JPEGs when you go into recession? The point being is our job is to look a little bit further into the future.
Raoul Pal highlights that the worst has been left behind now. All the major shoes have already dropped in 2022. We can expect lower interest rates ahead. According to him, recession is here. And if that's true, we can expect Bitcoin to price in recovery ahead in the future. Do you agree with Raoul Pal? Is 2023 going to be a good year for Bitcoin? Are we already in a recession? Do you think the Fed will keep hiking interest rates? Or can we see the Fed pivot in 2023? Let me know your thoughts in the comments below. For more videos on crypto, market, and the economy, be sure to subscribe to my channel. You can also hit that bell icon to never miss any video. Also, don't forget to give a big thumbs up to this video. I'll see you guys in my next video. Adios, and thanks for watching.